Hello, everyone. It's a pleasure to be here. A warm welcome from my side. Peter from the Creandum team. I'm here today with my colleague Sanna, who you will see in a second. And we're going to talk today a bit about the topic of fundraising during the pandemic. And I encourage everyone to, ask also Q&A via the Umbrella platform, and we try to answer as much as we can here. And in a second, we'll also brought some slides that we can share on here and lead you a bit through findings to what we think the fundraising development currently looks like and the trends there. But first, as a matter of introduction, I'm with Creandum. We are a classic early stage fund. Originally from the Nordics, one of the leading funds, founded in Stockholm, based in 2003, with 3 offices today: Stockholm, Berlin, and San Francisco. And we do invest in seed. The Creandum funds invest in seed and in A rounds primarily, and tries to back companies as early as possible, and tries to find the most ambitious entrepreneurs here that are on the road to, with the ambition to build global category winners. And we do this primarily in Europe, but also have an office and presence in Silicon Valley, as we do think that the biggest winners are global companies, and oftentimes you need to go to the US to win that. And Creandum wants to be as much as a support as it can be to do that. But yeah, Sanna and me are excited to be here. Sanna, as you also now see on the screen, based in Stockholm. Myself based in Berlin. And yeah, let's kick it off.
Yeah, hi everyone. I was here. I was actually just getting off the phone with one of our entrepreneurs who were fundraising. So I'm sorry that I wasn't here from the get-go. It was great that Peter gave the story about Creandum. So to tell you, you all sit in various locations, but in addition to covering a lot of our health and remote work topics, I have an extra eye on Denmark in the ecosystem there. So I'm very happy to participate here today. We will talk about fundraising and fundraising during a pandemic. But in order to do so, I wanted to start with taking a little bit of a step back. That this is something that has evolved for a while. And if we go back to February, we could see things happening, from it just being something is going on in China and it's not good, to signs of things happening in our near community, with events being cancelled, more and more social distancing, a bit of a worry spread both within the team and the portfolio, although we were more question marks than actual scaredness or frightened. But come March, what is going on? Quite quickly, we realized, we have to act, and what do? So we immediately stopped traveling. We closed our offices. I canceled my wedding, but more importantly, we turned our eyes to our portfolio, because, given the extra uncertainty, we wanted to make sure that we and they were in control of the runway, of the cash, and we had plans in place, although we didn't know what to happen, plans in place to act quickly upon. And at this point in time, we also started getting a lot of questions from entrepreneurs of, how are you thinking? Should I go fundraising? Is it possible to fundraise? And this is what we thought back then. So this is from a presentation I gave by the end of March. Yep, we didn't know, but what we thought back then was that one, great companies are created in all times. I'm just going to close the door. And we are determined and committed to continue investing. We also saw that there was a lot of money in the market, which needs to be invested. And another hypothesis which I had is we will likely see some more internal and smaller rounds, at least in the short term. And lastly, we were quite certain that institutional investors with strong and experienced LPs, such as Creandum and many other funds, would remain. Whereas it would be a little bit more of a question mark for angels, for example, who invest in private money and are directly affected of what happens in the stock market. So it was a lot about focusing on the runway and getting control. Come April and May, and we realized that we and a lot of other people started adapting really quickly. We worked remote. Most companies started working remotely. We prepared fundraising, and we also executed some very big follow-ons for companies in the funds. And moving into pre-summer, boom, we did our first 100% remote deal. And it didn't feel like such a big thing then even, because most of us were just adjusted to, this is the way we go about doing business now. But let's have a little bit of a look, what does the data said? We had some beliefs going into this. And as you can see in the charts, there is actually an impact in terms of the number of rounds. That went down by 45%, seed rounds over 50%. But what was not as expected is that the ticket sizes were actually bigger. So this could mean several things. One is that runway matters. You want to make sure that the round the company is raising is sufficient. But another thing, which Peter will also talk more about, is the concentration around winner. All of a sudden, you have this external certainty, and then you'd have more investors flocking around the ones that really seem to be winners. Another thing which data is also that there's positive sentiment around the second half of the year, and that is connected to the way we see and feel that investors and, more importantly, startups have been able to adapt. I think it's fantastic to see how quickly a lot of businesses have overcome what just a few months ago seemed like major challenges. And here we are today, not back to normal, but we have a new normal. We're doing events like this digitally. We're taking our investor meetings remotely. We have even had coffees and wine and dinners using digital tools, and it is working. And with that, Peter, I will leave the word to you to talk more about the fundraising.
Yeah, so I think it's right to call it sort of a new normal. And what we did is we sat down and thought about what does new normal mean for fundraising? Because the question remains, and the questions that have been asked in February and March and April when everything started and was maybe even a little bit more hectic also count for today. It's like not so many examples are there where you can really draw conclusions from, like how is which round and with which momentum perceived. And so lots of those questions still arise. And so we compiled the new fundraising metrics for sort of like at least the area of 2020 as we experience it for now, where we try to cluster a bit in two angles. And one is if you think about the chances of a company to fundraise, it comes down to two angles in particular, I would say. where we say, okay, how good has the company been performing, or how attractive has been the company, pre-COVID? And then the second axis is what is the COVID impact? And if we look at the x-axis, the sort of like the metrics and the opportunity around the company, we classified it here from solid to very strong, with reference to metrics like growth, retention, unit economics, and the opportunity like need, market size, team, the product you're building. And we intentionally left out the category of bad performance, because we think, if it was a bad performing company, it would have been fundraised too hard pre-COVID, and it is very hard to raise post-COVID. So I think the difference there is not that fundamental. And if we look at the y-axis, it really refers to what has COVID done to the business, and it can be or the underlying market, and can be here segmented into bad, which is negative growth, either of your business or the underlying market; neutral, which is maybe the same level of growth or decreased growth; and then positive, which is accelerated growth. And accelerated growth you see, for example, often in categories right now such as digital health, remote collaboration, communication tools. I mean, think of the stock price of Zoom video communications, what we're doing right now. Similar to that stock price, the development of some startups looks like that, have exposure to markets that are COVID beneficiaries. And I think looking at this matrix in a nutshell, we assert that new allocations of capital will concentrate even more than before on sort of the races, rockets, and the stars. So on the top right of what you see here on the matrix, and leading you maybe briefly through the metrics and our thinking there. If we look at the businesses that are on the y-axis negatively impacted by COVID, those can be categories such as think of travel tech, for example, that currently have a strong hit, not only in the short term mostly, but also after a couple of months there's no full recovery yet of the travel market. It's going back up, but definitely an affected area. And here we see, I think I would segment it in two things: companies that have solid performance, so not really great before, and that now really struggle with the underlying market. It will be very hard to raise. Those are for me the zombies that will get limited attention in fundraising processes, unfortunately. Then you have sort of like the sharks, some which people are afraid of, and maybe some like them, and it's possible, or sort of like you might better turn to existing investors to raise during that time. And then you have the boomerangs, companies that either have been performing extremely strong before, or companies that are in affected areas but are showing a strong V-shaped recovery. They're like a boomerang. They come back very quickly, and while you might have been affected heavily during March and April in physical lockdowns, you recovered very quickly, are pre-COVID levels already, and it was just for now a very temporary thing, and you show the strength of your business. If you move a little bit up, I think the middle range is where it becomes the hardest, and I think especially if you look at I think the difference here to pre-COVID is a bit, if we look at the ghosts, where you say company with a solid, which solid but not stellar performance. It's a 50-50 pre-COVID if they can raise. Now with the current times where capital concentrates more towards sort of like the highest scoring opportunities, etc. You will. So now can you go up 2 slides? Yeah. It will be tougher to raise now, and I think for companies that have sort of like that are not really impacted sort of like in their growth right now, I think especially for strong performing companies pre-COVID that are continuing to doing well, we see currently limited impact. So what we call the stars, like strong performing companies, with no real or maybe only a slightly impacted by COVID. What we see there currently is in the market that they continue to raise rounds, and they continue to raise great rounds and rounds with high valuations. I think there was a slight transition, whereas during the physical lockdowns, the uncertainty led to slightly lower valuations. But I think right now this is transitioning out again to normal valuation levels that we saw pre-COVID and very competitive processes. And then what the positive thing, coming out of COVID is probably for the companies on the top, which are, the lucky shots, the racers, the rockets, companies that really have accelerated growth. And I think from an investor perspective, I think the top left is a tricky one, because there are companies that have really accelerated growth right now, but it's hard to assess how sustainable that growth is. If it's, only growth that has been going on during physical lockdowns, or how will this growth look like maybe in 10, 12 months when companies are going back, or when the society of people are going back to how they work or how they interact normally without COVID, when they can meet each other, when they can travel.
So Peter, on that question, so I interact with a lot of companies within healthcare or remote work, which a lot of them have been positively impacted actually. And if you fall within that category, that maybe you weren't, as strong, you didn't have as strong entries before, what would your advice be? Is it to wait it out to show that it sticks, or should one try to explain why it sticks? What is a good strategy?
Hey, I think probably the ideal thing is that you need to find a way how your product can show, obviously can in a sustainable way benefit from this. And either is that through your product strategy, through your go-to-market and the people you target, if you can adapt to sort of the new situations. But obviously the ideal storyline is that you can sustain this. And B, I would say investors like momentum. So if you have momentum today, I would, as a company, probably go out with that and try my luck. If you need to raise money and want to raise money, then it's probably a good time if you have good momentum and good underlying growth. And then it's up to the investor if he wants to take that bet. But I would say it's less up to the startup to wait out until it's clear from the market. But I think that's a bet that investors need to take or not take. Well, yeah, just finishing this off. Then there's the racers and the rockets. Those are the companies have been performing very well, and they now are in one of those markets like digital health or remote collaboration, remote payroll, communication tools that just skyrocket at the moment. And those rounds are heating up. They're very sought after, and you see round sizes and also valuations inflating, I would say, but so is their current momentum and sort of like user growth, revenue growth, etc. But that's a guideline someone can use, sort of like assessing what you can expect in a fundraise. But moving on, maybe I think there are pros and there are cons. Pros on the slide before, where if you're COVID beneficiary, a con is obviously if you have a bad negative impact from COVID. But if we look at the fundraising processes, I think there's lots of pros for startups, or one can take out, and not everything is negative. So what we realize is that fundraising processes today are getting even more flexible, as everyone is, everything is more moving to virtual. Most meetings are taking over Zoom. People are traveling less, so have more time to meet. Also, think about your day. You maybe have not, usually a VC, maybe he comes to your office and visits you, and the meeting you schedule in person just takes longer than the meeting you might do on Zoom. And then if you run a process with multiple funds, you might have in the past had multiple funds coming to the office at the same day, and then you maybe need to schedule an hour in between so they don't overlap and these kind of things. And nowadays you can, currently you can just schedule it virtually and really do it to your preference. And I think for both sides, it's much easier to basically align on timing and interaction, as there's less travel involved. And also if you speak to international funds, not in your home country, it makes things easier. It also comes to that we've seen companies that when they had one investment committee, sort of like a day when they have maybe flown to Stockholm or London or Berlin for a final partner decision and partner meeting, where they in the past only could do one. You could do a couple if you do it virtually today. So that's a pro for startups that have multiple processes at the same time. And then we also see that the aspect of proximity simply becomes less. So when sometimes it still often has a tendency that you turn more towards funds that are close to you, and invest funds that have an office in your city or in your country. And with Zoom currently and the current trends, there are no borders. So everything just that proximity hurdle goes towards expertise and the preferred options you generally go for, regardless of borders.
And that is something which I think works even more in favor for startups than investors, actually. Previously we've had a little bit of a benefit in the proximity, but Peter and I need to be on our toes right now, because it's just because we're in good tech hubs means nothing anymore. Anyone could do an investment remotely. And another positive aspect we've seen is that there tend to be a bit less biases, because a lot of us tend to, we had a meeting, it's hard to extract the content from the overall feeling. You click with that. So there's also an opportunity. There is more focus on the content and the actual potential of a company than surrounding biases and halo effects. On the flip side of this, though, it is harder to assess the personal fit, and that goes both ways. The way we try to overcome this is to just spend more time with entrepreneurs, even though if it's virtual. Try to set up conversations which are more tailored versus getting to know each other than talking about the actual business. Another thing which I think a lot of you will have experienced, and especially if you're leading teams, is that excitement is harder to convey through a screen. In every meeting you want to bring some energy in, but if you want to have, in order to get the same result on a screen, you need to bring a lot more energy than you would into a room. And that also impacts the fundraising, because ultimately you want an investor to be as excited about this company and the opportunity as you are. Something we also notice is celebrations become a bit lame. That closing dinner is not really the same thing from the screen. And another thing, hardware demos or some product demos can be a bit more challenging. But as you can hear here, the cons, at least for me, are to a large extent outweighed by the pros. And I actually got a question at another event. Someone who said, if you had the choice, and this is totally binary, you either stay as it is today or you go back as to where it was before. It's hard to choose, but it was surprisingly many that said, let's stay in this and do like this. So I don't think I'm alone in feeling that, we can make these times and these changes actually work in our advantage. And you can also do that within the fundraise.
Yeah. I mean, hey, encouraging, maybe if there's anyone that has a question, feel free to post it, and we're happy to answer it. I think one aspect maybe to add this is on how can I improve my fundraising chances? So like, which strategies should I go if I say, hey, I have a fundraise coming up soon, and what can I do to improve my chances in those more virtual times today and more remote times today? And I think a couple of points there is really, one is the personal relationship point. I mean, it has been common practice in the past that VCs and entrepreneurs get to know each other even before a fundraising process. The typical have a coffee, let's meet for a coffee, which is more informal and getting to know each other, and try to build up this relationship before fundraising process. And I think we think, and also many entrepreneurs that we speak to, think likewise that it's a very important process, because who you want to work with, and likewise we want to get to know you better and see if it's a mutual fit. And this just is easier when it's done also in a more informal way, and then a less transactional way where you're actually already fundraising. And so I'd encourage everyone to make those coffees virtually, or if investors ask sort of like for an intro call or a check-in, it's a good way to get to know each other and build up this trust and personal communication. And it can be really worth it.
Yeah, and on top of that, I would also encourage you to add means of communication. Like, don't just use Zoom and emails. Find other points. Get on WhatsApp, for example. It doesn't have to be a big conversation all the time, but if you heard something this investor talked about it, which is of interest, and you read an article, send it on WhatsApp. That's a great way of keeping in touch, being top of mind in a very, very natural way. Another thing, which always goes, but it's more easily done now when people are available, is to have this short, 15-20 minute conversation. Hey, this just happened. I want to update you. Tell them that you're thinking about fundraising, and you should have the head start.
We have a question here from the Q&A part. The question is, it's much easier to be discarded when pitching virtual. How do I follow up? I assume this means sort of like, if you pitch virtually and to discard it, that you don't hear back, and how do I follow up? I think the encouragement is always to follow up, or just simply give a ping via email, like, hey, great to chat last week. Were you guys able to think about it already, or something like that? Simply give a gentle nudge, because it's most of the time not related to purpose, that someone on purpose didn't get back to. So it shouldn't happen, but just give a gentle nudge via email, and don't be afraid of giving that nudge, because you speak, and you should on both ways debrief after.
Yeah. It definitely, this is no excuse. Creandum looks at thousands of companies each year. I think Peter, I, and every one of us have the ambition to get back to everyone, but as Peter says, sometimes reality comes in between. And I get happy if I get a ping just saying, hey, Sanna, should we debrief this, or what's going on? Because we always have too much to do, so that actually helps us.
And I think the good thing is also, the earlier you do this, or when you do it, it's good, because if someone's interested, he can lead in and be interested in what you're doing, and then you also either you get hey, let's dig into deep, and let's find out more, or you get a no, and a no is much better for you to know it now than in 2 weeks, because then you can discard that investor for now, and focus on the ones that are interested. Yeah, I think maybe the last comment in what I always say before fundraisers is be realistic, especially in these times. I think sometimes we see very crazy and outsized rounds in the market. I think with COVID having kicked in, unless you are in one of the, let's say, a rocket with your business skyrocketing right now in a market that is really a COVID beneficiary. Just be realistic about your round size and around the appetite of what's standard in companies, you know, in your stage. But yeah, it's a pleasure to be here. If there are, you know, any questions, ping Sanna or me, go on Twitter, give us a DM, and you know, we're happy to follow up.
And we're easy to reach. You can probably guess the email addresses: sanna@creandum.com and pira@creandum.com. And we've had this debate of warm intros or not, but I'm a big believer in a good cold email. So just reach out.
Thank you.